With practice, you can make much better decisions based on judgment in the moment than you can predetermining what you're going to do.
Two traders, Darren and Walter, pull back the curtain on profitable trading systems, consistent money management, and profitable psychological triggers. Welcome to the Two Traders Podcast.
Welcome back to the Two Traders Podcast. I've got Darren on the line, and today, Darren, we have a question that came through from a listener about your trading. So here it is. This says, the question is for you, Darren. You mentioned some element in your trading where you simply decide to let your trade go or close it. Is it safe to say that your system is a gut system, meaning that it requires you to make decisions that can't be explained but always seem to be profitable? So that's the question.
Yeah, really I need to sort of briefly explain my sort of logic on trading first, based on how I'm approaching trading now. And generally most people, when they trade, they do some analysis of the market. And from that analysis, they kind of make a plan of what they think is going to happen next and what they're going to do when that happens. So say, for instance, let's say you're a trend trader and a trend is in place. And your plan may be to wait for price to retrace to a moving average, let's say, and then wait for a particular price action pattern and then enter into the market. And then you'll do a similar thing for your exit. Okay, and that's how essentially a lot of technical systems are kind of based on that process. When I look at the market, what I see is price moving and then not moving. Okay, and what I like to try and do is say, well, how can I participate in the market all of the time and make my profit on the movement, and when price isn't moving is where I have my losses. And the idea being that I will make more when price moves than when it doesn't move, and that will cover my costs, and that will be my profit. So, the advantages of that is really all I need to do is have a system that makes me participate in the market. And then whenever there is a movement, I will be part of that. And there's obviously a lot of psychological benefits for that. And there's downsides as well. So I do a similar thing when it comes to exiting my trades. And rather than looking for a specific set of events or occurrences to exit the market, I just kind of look at it in a broader sense. So I kind of have three rules, okay? One is, if there's profit on the table, there's no problem with taking that profit off the table, okay? That's what we're here to do, make profit. If there's risk on the table, then there's no problem with managing that risk, taking some risk off. So say, for instance, if I have 2 or 3 positions short and there's a trade setting up to go long, then there's nothing wrong with managing those positions. And the third rule is, you're never right. You've never made the best decision. Okay, you're just basically looking at your risk and your profit. So you could say that is using your gut, because I'm not looking for reasons why I'm acting. I'm just accepting that the market is going to decide whether I profit or not. And it's going to give me opportunities, and sometimes I'll make the best of them and sometimes I won't. And that's really, you could say that is a gut system, I suppose.
Yeah. Hearing you explain the way that you have, and seeing some of your explanations in the forum, to me it seems almost the opposite. And I could be wrong here, but to me it seems like you're almost removing your gut. You're removing that sort of intuition part of it, because hearing what you just said was, let's say, for example, you had 3 short positions, and the market's looking like it's starting to set up a reversal, basically a long position you might be getting into soon. So that's almost like saying, well, I've got 3 shorts and now I've got this long, so at the very least I want to reduce risk on those shorts or take profit or something, because in essence you've got to counter you've got a counter trade signal. You know what I mean? Or it looks to be, perhaps you're getting a counter trade signal. That's the way that you phrased it. So I almost look at this, and I could be wrong, but I almost look at this as like removing the gut and just following your rules, because you outlined very simple rules right now, which are, basically you're going to make money on volatility. You're not going to make money when the market tightens up and consolidates. And you don't have to be right every time, right? And so every time you see a little move that looks like a turning point, you get in and then you ride it and see what happens, right? And if you've got a lot of profit there, then maybe you lighten up. If it's not looking good or gives you a counter move signal in the other direction, maybe you lighten up or whatever, or I don't know, move to break. Do you move to break even? That's something I've always wondered. Do you actually move to break even, or do you simply take profit? Like if you have 3 shorts, and then it looks like you're going to get a long signal, would you move to break even on your shorts, or would you just take profit on some of them?
I always make that decision in the moment. So like you say, if I had 3 positions short, I may move one to break even, close one out, and leave the other one with its stop where it originally was. I may close all 3 of them. I may close 2 and leave one the stop. So although you're right, I do have like a set of rules. What I'm not trying to do is predefine the best rule before the event happens. So when the event happens, I then make a judgment call on what I'm going to do. And I think a lot of people want to avoid that because we're told that, there's going to be emotions at that time, and that's going to lead you to make, a bad decision. Whereas I've kind of grown into the belief that I'm going to look at those emotions there and I'm going to weigh it up and I'm going to make the best decision I feel I can make at that time. But it's always with that mindset that there is no best exit. You can always argue that there would have been a better exit, or you should have exited earlier. So I'm not trying to sort of pinpoint the exact thing I should do before it happens, because it's kind of like trying to say, if the market does exactly what I want, then this is what I'm going to do, and I'm trying to avoid that as much as possible.
Right. Okay. So yeah, it does sound more like a gut gut decision. All right. So, but my question would be, kind of want to tread lightly, are there some traders that you believe if they were to trade this way, it would be a disaster?
No more than if they traded a simple price action, moving average crossover, trend following, any other system. I don't believe that it's any more risky than trading it those ways either.
Okay. So why is that? Because to me, when I hear this, and what I've noticed, and this maybe this happens more on the lower time frames because of the way we're engaged in the screen, but the way our brains work in terms of playing the pokey machines and playing the broker's pokey machine. But I've seen in myself and certainly in other traders a situation where if a trader goes into a trade or even an account, trading an account, if there aren't rules put in place to keep this person from, risking too much money or taking too many trades, revenge trading and all those sorts of things, basically the account you'll start to chip away at that account and lose money. So that's the reason why I bring this up, is I just wonder if you give yourself too much leeway, are there some traders who, like, for example, if you have 3 short positions and there aren't any rules in terms of managing that risk, it's just sort of maybe you do this or maybe you do that. So you're saying it really doesn't matter. Like, for example, let's say I had a strict moving crossover system, right? Where I had 3 moving averages and the 2 longer term ones would initiate the trade, and the shortest moving average would be when price crosses that, I would get out of the trade. So that would be like my trailing exit sort of thing. And so, this is pretty simple, and there are a lot of these out there, but at least I have defined the rules of engagement, right? And I'm in this box. And if I go outside of that box, then I'm not really trading what I tested or back tested or whatever. But with this, it seems like there's a little bit more wiggle room here. And so I could see a situation where trader A does really well with this, but trader B has a horrible time. And so I guess my question for you would be, you don't think that that's necessarily due to the trader's personality. You think it's just something else.
Yeah, essentially what you're saying is true initially, because we come into trading with we've got our own biases and beliefs about what trading is and what works and what doesn't work. Generally, that's what we've been told the most often, rather than necessarily what's true. And we do that with everything in life. We tend to do that. We make judgments based on what we've been told, what we've already learned, rather than learning for ourselves. So
absolutely.
I mean, initially I agree with you there, but what I like to try and encourage traders to do is have a period of trial and error and trading with these different ideas, such as the idea, such as the way I trade, and learning to deal with those judgments basically, and learning to I really strongly believe that with practice you can make much better decisions based on judgment in the moment than you can predetermining what you're going to do. I really strongly believe that. Initially, I think, definitely, if you've always traded in a very structured way with a very strict rule set, if you just suddenly start trading this way, then there is dangers from that, because you will find yourself, even if you're telling yourself you're not going to do it, basically looking at the charts in the same way as you always have. So it takes time to sort of get used to trading this way. I just think that the brain is just so much more powerful than we think, and we can train it to make good decisions in these environments. I do agree with you. You do need to have some sort of structure, okay? But I also like to allow that element of judgment to come in as well. I want to use my brain. I'm giving myself enough credit to be able to make good decisions.
Yeah, that makes perfect sense. So, so here's a question for you, because I think I'm on to you. I think all things being equal, you have two traders here, and trader Bob has been trading this way for 2 months, and trader Annette has been trading this way for 13 years. Would you say that it's likely that trader Annette would make better decisions in the moment than trader Bob?
You're saying they've both been trading technically with a strict rule set, or you're saying that they've been trading my way?
No, your style of trading.
I would definitely say the trader who's been trading longer is more likely to be making better decisions.
Yeah, she is. Yeah. So Annette's going to do better because she's basically seen more charts. She's got more experience. Does that jive with what you're saying?
Exactly. And in my Facebook group, I've got a group of traders who we all trade in the same instruments on the same time frame, taking the same entries, posting them live, and we're all getting different results at the end of the week. Okay. The interesting thing is, generally, if the market moved last week, we all made profit, but different amounts. Generally, if the market was very flat last week, we all made losses, but varying amounts. Okay. So basically, the market decides what opportunities we've got, and then the trader decides who makes the best of that opportunity. And then, of course, there's luck and chance coming into it as well. Okay, but that's always evident in however you trade. Yeah,
absolutely. Yeah, I mean, you could say the same thing about funds. You say, well, generally the the S&P 500 went up in 2000, last year, right? The S&P 500 went up last year, so generally funds were up. But now let's say this year you have a year where the stocks and commodities take a beating, right? But for the whole year, generally you might find some funds that are down. But here's the thing. The funds that were bearish make a big pile of money this year because everything went down, whereas the majority of funds that are essentially long in most of their positions, they want price to go up for oil or for Google stock or whatever, whatever it is. They take a beating. Whereas as a trader of currencies, we are a little bit more flexible in that ideally we would be just as likely to go long as short. And in this case, trading this system that you use, it really doesn't matter if it goes up or down, really. And this is no big revelation for currency traders, but what's interesting to me is that it's essentially the same sort of results that you see, with a lot of these funds. So a lot of private funds might have a really good year across the board, and then others might have kind of a bad year, more or less across the board. And so you're saying that's the same thing that goes on with your group of traders that trade this way. It's basically the rising tide lifts all boats, but it depends on how the captain, he's the one that's really steering the boat. So he's the one that's able to decide in the end how much of that he can take advantage of.
Exactly, yeah. And I just love this feeling that the unexpected can happen, and the unexpected does happen all the time. And with a bit of a freer system, then you have an opportunity to capitalise on that. Of course, it rubs both ways. But just say, let's say, for instance, let's say I need to go into town and I miss an entry, okay, and then I get into town, I check my charts and realise that I've missed a particular entry. Now, if you've got a very strict rule set, then you've missed your entry, and that's it. You need to wait for the next setup. Whereas, I can just come there and say, well, you know what, I missed that entry. It's actually at an even better price now, so I'll just take the trade now. And I like that ability to have a structure, but then make my own judgment call. And I just find I beat myself up about it a lot less then, because really I've completely taken on board the uncertainty of it. And sometimes I'll miss an exit, and because of that, well, price has gone another 40 pips in my favour. So I don't see a rigid structure. With the market being so complex, I don't see it being able to be more advantageous than making judgment calls.
Right. That's an interesting comment, like the complexity of the market. I'd love to talk about that in another podcast, that particular idea, because I think that's something that people, they have opinions about one way or the
Strong
other.
Opinions.
So, strong. So, okay, so this is making sense. So I think we're definitely in agreement on one thing, which is I believe that you do have this opportunity as a trader. When you, like, one of the things I keep telling myself and reminding myself is when I see the charts, if I allow myself to let one more candle print on the chart, that's more information that I now have that can help me in my decision. And my decision may be whether to move to break even, whether to take another position or extend the target, whatever it is, you know what I mean? Like, that's kind of what you're saying here, is that you're allowing the market, it's like a feedback loop. So you've made a decision, the market's printed some information on the chart for you, and then now you sort of readjust. That thing can continually happen for you as a trader. But my whole thing is that my strong belief is that in the beginning, you're going to be really poor at that. Like, that's not something that's going to come easily for most traders. Very, very few, like maybe one out of every 800 or 900 might be able to do that from the get-go. And I think overall, most traders need the experience to get to that point. What are your thoughts on that?
Yeah, definitely. And when you start out, you learn very quickly. A lot of trading is dealing with the fallout from your decisions, and whether they be predetermined or judgment calls you made at the time, that is a difficult thing to learn. I think a lot of traders never really learn that. I think predetermining those things way in advance, deciding today what you're going to do if something happens tomorrow, I think that on its own, I can't believe that is ever going to be better than allowing some judgment at that time as well. So, have some structure, but also allow some judgment, and accept that sometimes, however you decide to manage your trades or enter or exit, the market is going to throw a curveball at you and do what you don't expect. And I think that's something that, more than anything, people would like to remove from their trading. This is why backtesting is so popular and people do so much of it, because they're looking for that confirmation that they their structure, their rules have finally removed that to X extent, and then they can feel happy trading. And I'm just saying, perhaps for some people, it's better to accept that you can't remove that and use trial and error to learn to be a good trader.
Yep, that makes perfect sense. What would you say about the idea that backtesting could also be used just to gain experience making decisions with the charts? In other words, sort of like the high wire artist who starts practicing walking on a high wire with just a low wire that's strung between two trees, and it's only 3 feet up in the air. So you sort of get that experience walking back and forth on the high wire.
Yeah, I would say that is the most beneficial side of backtesting. I think people like to get absorbed in precise numbers. This was the drawdown that my system's going to create. This is how much profit. This is how often I'm going to profit. I think they look at it from that point of view, whereas I think the real benefit from backtesting is, okay, I've got this idea about how I'd like to trade. I'm going to run it in backtest and see how it works out, see if it makes profit. And then I'm going to take that into my live trading, maybe only on a demo account, but actually trading in real time. And then I'm going to play it through there. And I'm going to use both the information to see how, whether I should continue down this route. So I think that's, for me personally, that's the best way to use backtesting. Test an idea and then try. I've seen it very often. Backtested your system, it's brilliant. I doubled my account in 3 months. Then they trade it for 1 week and they absolutely hate it and did really badly. And the actual physical process and emotional process are very different.
Yeah, absolutely. Yeah. That's fascinating, Darren. Thanks a lot for sharing, and thanks to Annalisia who posted the question. I appreciate it, and we'll see you next time, Darren.
Okay. Cheers, Walter.